morning, everybody. This is Trading Talk Live with Patrick MontesDeOca. We're going to move right into the live trading room here in Discord, and we recommended our traders here this morning to lock in some profits here on silver and gold from the swing trade that we've been following here. Long from 22.02. We sold the silver at 22.55. We locked in $2,650 profit per contract on the swing. Let's take a look and see where we are. Gold trading last at 1805.50. It's up about 670. The gold market has completed the sell 1 target of 1810 and the sell 2 target of 1810 and the sell 1 target of 1806. So we are flat in silver and gold for day trading, for swing trading, and let's watch the market here for a little bit here as it came down and completed the weekly mean average of 1804. It activated the weekly average, and now the market is reverted right back up above the weekly average, which has activated a bullish price momentum. And if we're going to follow through on the weekly signal, the momentum target is 1826. If we can get through this level of resistance on the daily, and on the week, the daily is 1806 to 1810. Now, what you notice here is the price is around the red level, which is basically an indication of resistance. And this is a pretty high probability area that it tells you that potentially you can expect supply, as we can see here, come into the market. So let's let the market trade here for a little bit in gold, and we'll come back here to it. Silver is trading last at 22.62, up 16, and we've completed as well the targets from that 22.02 level here. 22.59 was the weekly target. Let's take a look at the signal here that we activated from the monthly trigger of 22.02, and obviously coming back up to 22.75 is 22.71.50 was pretty close to the target, so we decided to go flat and take profits here on the silver market. The gold market as well is trading around the average of 1805 on a monthly. So we for the short term have gotten into an area where we can expect a bit of trading as we take a look at the monthly levels here at the average price of 1805. Bitcoin is activating a buy signal here from the daily 41,748 level. came down to a low of 39,470, not quite activating the weekly buy level of 38,943, and found buyers at a higher level, reverting right back up into the daily signals, integrating it to the daily signals, and now we seem to be activating a daily buy trigger on Bitcoin. If you are trading a Bitcoin here in the futures contract, I recommend to trade the micro contract. For most people, the full-size contract is a large contract. So we're using MBT, which is the micro Bitcoin, to take a position in the market. And we're long 30 micros at 42,222. We're up 780 on our profits here, $1,000. We have obviously today the Chairman Powell testimony, which kind of is affecting the market here a little bit in expectations of what the policies are going to be, or talked about anyway, because the only thing that is being done is the tapering of $30 billion a month. As far as the raising interest rates here, it's as I've been writing about, a precarious situation with the fundamentals that we have right now of basically high inflation. People are leaving the workplace. 4.5 million people left the workplace. Companies are in dire straits, so to speak, to get the right people to work for them, and people are walking away. So it's an interesting dilemma, you might say, that has shifted the balance of power to demand, to basically the labor force that we have. For the first time, I think in as far as I can remember, the labor force now seems to be in control. So we have a lot of wage pressure building up. Everybody's increasing prices to adjust to the CPI, to adjust to inflation. That, according to Chairman Powell, seems to be a transitory issue. Now, part of the problem that I see here, if we take a look simply at what I look at is here, which is the 10-year note. We're trading the 10-year note at 177. We saw a high of 180 yesterday, and the high was 180, 1.808, and this simply signifies that short-term rates are moving higher faster than the 30-year bond, which means an inverted yield curve. And so they are continuing to maintain the 30-year bond, or they are maintaining lower rates on the 30-year bond, which is obviously what they need to do in order to protect the debt, the record debt that we have, while they let the 10-year note adjust to its current inflationary pressures, with the hope that this inflationary is transitory and then we get a flattening of the yield curve as inflation subdues in the months ahead. On top of this, obviously, we have this Omicron situation that is putting a lot of pressure on the labor force in going back to work, on businesses opening, reopening, requiring mandates, masking, vaccinations. It's a mess, and there's no clear path or indication of basically what some of these health policies are going to be. Nevertheless, people want to go back to some kind of a normal life, and obviously that demand is what we are experiencing here with regards to short supplies, with regards to pretty much unprecedented levels of demand. So the question is, are prices going to deviate people from buying at these prices? We have a saying here as a trader that higher prices is good for, basically higher prices, because it prevents people from buying. People step back, and therefore the price has to adjust to its supply and demand. If people are not paying for the prices, no matter what people are asking, obviously we're going to get a retraction in prices here. And so that's the expectation, that as the prices seem to be getting out of hand, just like in real estate, people are just stepping back, and allowing for that to resolve itself. That potentially what we're looking at here is a capitulation in terms of prices, higher prices here, which seem to be adjusting to the tremendous amount of stimulus that's been provided, free money that's been provided in the economy as a consequence of the pandemic. But we're beginning to see that this is causing more damage, you might say, than benefits, in terms of the ability that there is so much cash in the system. The balance sheet has exploded over $5 trillion. And so this is part of the pressure that the Feds have, obviously, to be able to reduce this free money, so to speak, and see how the economy reacts to it without any temper tantrums. So the expectations are that already have been built into the market here, that interest rates are going up. Everybody's talking about 3 or 4 interest rates increases here this year, maybe sooner than March, and the pressure is on and so on to raise interest rates. So I think basically what potentially is going to happen here, my feeling is that the Feds have to act in order to keep their credibility. So maybe one increase of interest rates of 25 basis points potentially is in the cards. The question is, how are the markets going to react? My feeling is, to all you gold traders that are bullish traders here, my expectation is that we're going to have a very similar situation as we did back in 2017, 2018, when we saw the first increase of interest rates by a quarter point. The markets really went into a temper tantrum, and the Feds decided to pull back and revert, in fact, from increasing interest rates to going deeper into negative interest rates, which is where we are right now. We're looking at the 10-year note at about 180, and you have the CPI running at 6.8. or inflation running at 5% on the average, right there, you're looking at a 3.5% negative rate. And this is the dilemma that on top of all this, we're dealing with record debt levels into negative interest rates, monetary policy, into a shortage of supply that is causing massive price pressures. It's going to be tricky to see what the Fed does in terms of maintaining their status of dot plotting that indicates basically for interest rate hikes in 2022. So we're going to be trading choppy here today, and I would just maintain your position, your core position as we've been suggesting, and just prepare to buy into any dips or corrections in these markets, because the surprise once again is going to be that the Feds are not going to be able to raise 4 interest rates. And if in fact that is where we're going, the markets already have discounted. If we're talking about it right now, the markets have already discounted. Otherwise, they would be collapsing even further. So, if they don't raise 4 times as the market has discounted, then what we're looking at is prices tremendously undervalued to those indicators fundamentally. And this is what I believe we have been experiencing here now for about 12 months, particularly in the gold market. We have been experiencing an inverted market to the fundamentals. And that inversion will adjust itself when the market decides to adjust to its mean. And in terms of gold price discovery, we really yet don't know what that mean is, because the price of gold has not been allowed to freely adjust to that mean. But the data shows 2000 level certainly is a realistic level to look forward to. We have a pretty quiet market here today. As I said, we're waiting basically to hear the word of Chairman Powell. So it's a day that we want to watch. We're flat on the futures. We're flat on the swing. And we're long the core position long term. Let's just continue to enjoy your quiet day here and allow for prices to just trade quietly here as we wait for Chairman Powell on monetary policy. Indices are also pretty quiet here. We've activated a weekly buy signal here on NASDAQ from 15,199, as you can see, as of 7:45 a.m. as of yesterday. I want to take a look at the silver weekly report that we published here on January the 9th. As we commit to this week, the trend momentum was bearish from 23.25, which is the 9-week moving average, and this is the trend momentum. This is the bigger trend momentum. The weekly VCPMI of 2259 is the variable changing price momentum, and that came in at 2259. This is the mean or the pivot point. With the market closing below it, it activated a bearish price momentum. And it told us basically, with the market closing below the average and closing below the trend momentum, basically, the target coming down here was 2174 to 2110 for the rest of this week. And it clearly gives you the prospective levels where you need to cover or execute the trade. Now, if we take a look at the silver market, the low was made at 2194 at 5:30 a.m. on the 7th, not quite coming down into the buy one level, activating the weekly signal. But what you see here is that this indicated that buyers came in and took all the supply out of the market, which is what they supposed to do, or what's supposed to happen when you see the price into the blue levels. And it reverted from here into the daily, integrating the daily trigger. And you can see here at 7:45 a.m. on the 7th, it activated pretty much a buy trigger from these blue levels that we're looking at, which fluctuate daily, but it's within the same parameter, so to speak, that gives us the idea very clearly that the blue levels are levels to accumulate supply. So 2202, 2208, were levels that we kept recommending. The 2202 is the monthly trigger that we looked at, and it began to integrate harmonically with all these daily signals here. It reverted right back up to the target as you can see, completing the target and completing basically the weekly target of 22.59. And this started happening at 6:30 p.m. So you had this information as a self-directed trader in position for you to start taking some profits. This is the prospective intelligence, artificial intelligence, that it tells you. So now, you pretty much, when neutral, you wait, you let the market trade around the average, and as you can see, it went up into the area of distribution of supply daily of 22.63 to 22.75, and it reverted. And it's reverting from that level because you're getting supply up here, and it's reflected in the price. Now, what we want to see is the supply that's coming into the market here is stronger than the selling pressure that you see here, and it closes above it. This will activate the 23.24 target on the weekly basis. Continue to hold your long-term core position here. Let's see what happens with Chairman Powell. If any corrections in this market bring you to the blue levels again of support, buy into that correction. Thank you again, my friends, for the opportunity to share this, and until next time, please have a safe, great trading day. Have a safe, great trading week. I'll talk to you soon.